Hello, welcome to the Compassionate Capitalist radio podcast and video cast today. If you're tuning in for the first time listening to myself, I'm Karen Rands, the host of the Compassionate Capitalist podcast. And this is also going to be available on YouTube with my special guest, Karen Walker. And you can pick it up on her YouTube site. You can connect to it through both of our websites, which will share all that information here in just a few minutes. You can listen to it as the straight up podcast. You're obviously listening to us now somehow, either on Facebook or on one of the podcast sites that I broadcast out to. And so thank you for tuning in. The goal and the purpose of this show is to convey information to both entrepreneurs and investors that I believe operate within the ecosystem or have potential to operate in the ecosystem, what we call compassionate capitalism. And it goes beyond. Capitalism is what we do that's sort of ingrained and second nature to us, particularly in the United States, where it's buying and selling of stuff. And so businesses are all about capitalism. Buying and selling of stock is about capitalism. Real estate is about buying and selling real estate. That's capitalism, making money in those kind of transactions, and how to go best about doing that. And the compassion side comes from the passion that entrepreneurs will have as they pursue a passion that they have, a problem that they're trying to solve in the world. And so it's not just about buying and selling and making money. They're solving a problem. And then it's those investors that realize I can do better with my money. Yes, I'm going to invest in real estate. Yes, I'm going to invest in public stocks. But if I carve out a portion of my investment strategy and portfolio and put it to work investing in entrepreneurs, don't have to be that entrepreneur and assume all that risk. And two, I can help be a part of the financial machine that helps them bring that innovation to the market that's going to create more jobs and solve a problem that we have in our world today. So the goal of this show is to convey the information to that end. So we get better businesses, more effective CEOs for running businesses and doing right by their employees, and better investment strategies to be able to have an impact I've been doing a lot of these types of interviews lately, and there's a lot of capital available in the marketplace, a lot of wealth. Probably 7 million accredited investors in the United States that never have invested in a private company. And so there's a lot of money out there that if it was put to work to this end, we could solve so many problems when it comes to our environment, our safety, our well-being, our improvement of our lifestyles, just so many things that you can think about that you ever wish that had. And I've seen so much never get to market because of that. And so it's really, really important. And so my goal here today with my special guest, Laura Walker, is to talk about a key component of this aspect of it. We're going to talk about, so if you're tuned in now, get ready. When companies are they're looking and they're struggling and they're striving to grow, and it becomes that time that they need to shift from working in their business to on their business so that they can have the processes, the mechanisms, the systems to be able to scale and achieve the goals that they've set when they go out to seek that next round of capital, and ultimately set themselves up for their liquidity event, either an IPO or an acquisition that's going to create their own extreme personal wealth and the wealth for all of those involved, and even their employees if they have a stock purchase program. And so it's a really critical thing that gets lost in the shuffle a lot of times of the day-to-day busyness of growing a business and trying to measure my success on what my revenue number is and my profit number is, without really thinking about what is my operation like. And so Karen is a true expert in this field, and I'm so excited that she's going to be on our show to share her insights. Welcome to the show, Karen.
I am so happy to be here, Karen. We'll have the two Karens today.
Yes, right. The Karen squared. So let's talk a little bit about Karen's background, and then I'll let her take the ball and continue running with that. So Karen Walker, she's the author of a recently published book called No Dumbing Down. It's a no-nonsense guide for CEOs on organizational growth that we're talking about. And she will talk about her time-tested 5 strategies for preparing scalable and sustainable growth. She talks about that in that book. So that's going to be just like my book talks about how to decide what to invest and where to invest and how to get started as an angel investor. She's talking to the how-tos and whys of doing the things that we're going to touch on just lightly in this show. So get the book as the definitive guide and your roadmap to that. She's an advisor to CEOs and leaders. She helps her clients grow their companies with successful outcomes that include IPOs, acquisitions, market share increases, and leadership development. Her clients include Inc. Fortune 500 startups to Fortune 500 firms. She's employed her hard-earned strategies I'm misreading this. Karen employs her hard-earned strategies forged from the early days, at her compact computer, where she was part of the very early days of building that company. And then it was one of the fastest growing companies in America on the fastest to $1 billion in revenue. So I always like to have people on this show that not only can walk the walk, but talk the talk. And so thank you very much, Karen, for being on the show. And let's get started.
Well, I'm really happy to be here, Karen. I do have my civilian version of war stories from that time at Compact for sure.
Yeah, good. So let's talk about that. So let's get into a little bit about how you became one of these what it was like to be part of the early startup of a place like Compact, and then how that transitioned to where you are as, providing advice and counsel to other such companies.
Great. Really good place to start because I wouldn't be here today without that experience. I was just fortunate to be working right out of school with a large company in Houston. And I started noticing people I thought a lot of leaving the company, sort of more senior managers, but people I really enjoyed working with and were very competent and accomplished. And I thought, wow, and I heard, they've got a startup down the street. And, back in the day, we didn't have a lot of startups down the street. It was kind of a big deal to have that going on. And
excuse me a second, that was like 88?
That was in the early 80s.
Early 80s. Okay.
Oh yeah, portable computers were new. I think IBM announced their desktop PC in 81, and Compact was started in 82.
Oh sure, because right. I remember the big luggable suitcase.
Oh my gosh, yeah, giant.
My early days were IBM, and I remember IBM trying to figure out how they were going to compete against this.
Right.
It was portable because it had a handle. And that was pretty much the only thing that made it portable. And so I actually I think I still have it on my desk. I keep thinking I'm going to put it in some museum. I have IBM's PC convertible, which was one of those luggables like that. So please carry on.
Yeah. So, I mean, luggable, right? Not really portable, but portable in the day. And anyway, the company was started with the idea that we would have a quote IBM compatible, because we didn't have open software those days. Depending on what machine you were running, you had specific software. So Compact sort of pushed our way into both the portable business, but also having open system software. And I happened to be employee number 104. We didn't have any revenue yet. We hadn't shipped any product yet. Yeah, there's a lot of goodness at the end of that story. But at the beginning, it was like, wow, I don't have a lot to lose here, and I would like to work with these people. So I went over. I was in charge of all the global infrastructure, which wasn't my title to begin with because we were 100 people. We didn't have global infrastructure. But eventually, I became the vice president in charge of all that. So I was there for 14 years. I saw and helped lead the company as a vice president in charge of all this global physical infrastructure. From no revenue to $15 billion by the time I left, and from 104 to 17,000 people by the time I left. So wow. I lived through and led through this intense period of hypergrowth. And it was amazing, as you can imagine. It was definitely something that would be definitive in anyone's life and was in mine. And my own little group, went from a party of one to about 300 people worldwide, with thousands of contractors and consultants. And we can talk more about that part of the story if you want. But I left after 14 years because it was, at that time it was just a giant company, and it wasn't a place where I could see that I would be doing many different things over the years, just more of the same, bigger. So I left and took some time off to figure out what I wanted to do next. And I fell into consulting, basically. I met my now husband, who was a psychologist. I'm an engineer. and he had been consulting with CEOs in tech companies. So we joined forces and ran a consulting company together for 10 years. He subsequently retired, and I am still fully full steam. Yeah.
Very good. Excellent. Gosh, I'm a junkie for the stories of the track records and stuff, and having been somebody that, lived and breathed. Like I wrote my master's thesis on the worldwide global economic impact of the Apple computer. And so, so, and like, what did this mean? All of these kinds of things when it came to how we changed to do stuff, or, education processes, just the things that we totally take for granted now. And we have generations of people that have never had a different way of doing it. Right. So, so I'm always fascinated. And what you said, 104 employees without any revenue. So because part of what I talk about in my book is the .com, sort of like these trends and evolution that you have, and the flow of money in and out of a market that fuels the growth of entrepreneurs, and as well, and kind of how these markets are created and how they ebb and flow and how they become bubbles. And so that so they must have had, was it like big VC backing to be that, because we look at some of these, before there was unicorns, that was based on that. I mean, you had the making of what was a unicorn there. We just didn't have that term because they valued companies based off of actual revenue and things like that versus just what people had been putting into.
That's right. Yeah, we weren't a SaaS business, right, where you could see what was coming down the pike. Yeah, we did. We had venture capital from a company called Seven Rosen. Ben Rosen.
Oh, sure. Yeah.
Right out of New York and Dallas. And then John Doerr from Kleiner Perkins was also on our board. And those were the first two investors. Yeah. But now, no revenue at 104, but we did $111 million in our first year.
Oh, so that 104, so this idea of building this, you had really stellar, like, founders, with a track record.
Absolutely.
And this idea there that it was okay to go head to head with, fledgling Apple and I think there was I forget the name of Amdel was the other PC at the time, or an IBM, and these kind of things, because it was still a sort of an uncharted territory. There wasn't one of these things where these guys are entrenched competitors and it's going to be hard to establish it, like
right.
Dell came later on.
We were the first with the first to market with an IBM compatible machine, and it was clear from very early days that there was a lot of pent-up demand for this, right? Not as much as for a desktop, because everybody wanted a desktop, but every office wanted at least one portable they could take with them. And so we got the funding to be able to sort of ramp up, so that when we announced, we could begin to meet that demand. Yeah.
Well, and then all of that you think about all the glitches that companies go through, and this can kind of segue into, this growth capacity piece that we want to talk about in these steps, because I say, even with experienced companies, I remember when IBM was bringing out the first ThinkPads, our laptops that had the little orange or the red button in the middle for your mouse. And I was at the time on the PC team, and we couldn't figure out how they messed up on forecasting so bad that we would have a shortage like we had. You're IBM. Don't y'all know how to do this kind of planning sort of stuff? So the fact that you did 100 million as a startup with no real roadmap of already following that's really quite the story. I'm sure it's not near as painless as it sounds if you got the 100 million in the first year, because you might have been able to do 300 or 400 million, but still, it's really quite the ramp up for scaling.
Oh my God. Yeah, right. And that was one of the great competencies that Compaq had. And I think one of the competencies that any successful, better CEO needs to think about as they think about, sort of preparing for their future. Once you find that product market fit, then what? Right? What are you going to do when the big bang occurs? And that's really been the basis of my work now for the last 20 years. But of course, what happened at Compaq was we went from nothing to 111 million, then we went to like 2 something, then moved to 3 something, 5 something, and then we hit $1 billion. And that was revenue, not valuation. So we did that in just a handful of years. But we did it because we were so comfortable with ambiguity, right? Which I think is a absolute must-have trait for anybody in the tech space, in particular anybody leading in the tech space. Because if you need a lot of knowns, you need to be in a different industry. So comfort with ambiguity. And then we had tremendous flexibility built into our systems and processes. Now, physical infrastructure, my area, was the longest lead time item for the company. Because let's say we needed to build a manufacturing facility or a distribution center or something, that you don't do that in 6 weeks.
Right.
Turns out you can lease and stand one up in a very short period of time in the US, but you can't do it that quickly anywhere else. And so one of the reasons I got so interested in strategy, which is a sort of a core component of my work now, is because, you could forecast things in a straight line, but they're never going to happen that way. And so what you have to do is make plans for upside and downside. We're often pretty good at making downside plans, but we're not so good at making upside plans. But to have, figure out sort of where your boundaries are there, and then have the plans in place so that as you hit those boundaries, you know what you're going to do. So you don't have to take time to say, oh, wow, we're growing faster than we thought. What are we going to do? Are we going to fill these orders? Or are we going to just slow down or whatever? Same thing on the downside. When IBM, for example, came out with the PS2, which is proprietary software, in an attempt to sort of regain control, we weren't sure what was going to happen. And the options were, sort of cease manufacturing in case we go out of business because everybody moves to this new machine, or to continue to build them and stockpile them. And that's exactly what we did. We had trailers full of computers all over the city of Houston, ready in case people didn't migrate to this new IBM system, and they didn't. And so we were able to, there was all this pent-up demand because people were waiting to see what that machine was. And then once it hit, we were able to release all those machines and go on to have a really stellar
yeah. All right. So you hit on a couple of points there that I think are really important for, we were talking about companies that are in the growth stage, but I have worked with startups and continue to get pulled back into the startup realm. It is something that I think startups really have a challenge in this when they forecast what they're going to do. And a big thing that I'm always trying to hold their feet to the fire because of the unknown. So there's the unknowns because you've never done it before. And then there's the unknowns that are market variables and things that you're not really sure what's going to happen. In the case when IBM had that shortfall, it was something that was with that touchpad that ended up being a glitch that slowed down the manufacturing line, and they didn't think they were going to actually sell as many as they were going to sell. And so there was like two things that contributed to it. So they couldn't catch up as fast as they wanted to, re-engineer the line for that or something like that. So it's when we're talking to entrepreneurs that are startups about these things that they don't know, we say, go get advisors, go get other people that know that so they can tell you, oh, this kind of software takes 6 months to sell. Right. This kind of software, it takes this, if it's selling through internet marketing or something like that, it's going to take 10 touches in order to get them to convert. You'll have some that convert sooner, but on average, you're going to need to plan for this. Again, the ups and the downs and that kind of stuff. And so often they don't. And I think sometimes investors get caught up in the emotion and the excitement of what it is that they're doing without thinking through. They figure, oh, we'll figure it out later. And it could be that some of those really experienced angel investors, particularly ones on the West Coast or have been involved in tech, they themselves, and this word ambiguity is what I picked up on. They themselves are comfortable with the ambiguity of not knowing all the answers, just knowing that if we roll up our sleeves, we'll be able to figure it out. And that's why they take an active involvement. And so sometimes there's a rub with the entrepreneur because the entrepreneur is like, I don't want them telling me how to do everything, but the entrepreneur really doesn't know how to do everything. And so they need somebody that's comfortable with that ambiguity, that's been there, done that, and has made those decisions and either lived or died by them and figured out what to do next on that startup side of stuff. So ambiguity is really, I think, a critical
Mm,
word in there of your
absolutely.
comfort level of that, whether it's as a startup, I don't know what I don't know, but I'm going to be able to deal with it because these are my measures, my processes. These are my plans of how I deal with the ups and the downs of that. But
Yep.
then even with the seasoned entrepreneurs, the companies that are growing, that they have such they have a different set because they get stuck in their ways a little
Oh
bit.
yeah, yeah, yeah. That's great. So I have this thing I call the SOP continuum. So it's sort of SOP, seat of the pants, to standard operating process, right? And what you need is a way to, what happens in companies, right? Most startup companies are all seat of the pants. Occasionally you've got your investors who bring process, or you've hired someone who's done a little bit of this before, they have some process. But then as a company sort of grows up, we end up sort of with this other end of the continuum where people are so bound up by their process that they cannot get things done. And that's what when we think about sort of these big old staid company, that's often what makes them that way, is they just over rely on their processes. And so what you need, I think, to be a successful growth company, a successful startup, is to be able to pick the place on that continuum for the situation that you're in. So those things that you're able to make sort of replicable early on, put processes in place for those. But don't let those processes get in the way of doing what needs to be done, but as long as they're supporting you. And then other things that come up that you haven't seen before, maybe those are more seat of the pants, or there's some place in the middle of that continuum. But you don't have to be hard over one way or the other, but to know that you have options about sort of what you're going to do with the situations in front of you. And for a CEO who has a million things to think about, 10 million things to think about, anything that you can sort of shuttle off to being a process, you should do. Right? If it's something that happens over and over again that doesn't have a lot of variability in it, so you don't have to think about it, and neither does your staff.
Okay, let's get into a little bit of that because that is a core component of assessing yourself as a. Let's just assume. Let's go with the company, not the startup. The company that's got, maybe they're not a Fortune 500 company yet. They're in that startup. They're still labeled startup by the industry, but they've got 5 million in revenue. Let's say, right? They've need to go out and do another round of raising capital,
Mm-hmm.
and been flying. They've been flying by the seat of their pants with some processes in place,
Mm-hmm.
right? Up until this point, and they need to go raise $10 million so they can become a $50 million company because they got this whole new line of
Yep.
products they want to come
Yep.
out. All right, so that's our scenario. So, what would be one of, because they would come to me and say, "Hey, I go and need to raise capital, Karen. Where do you know? Who do you know that invests in these kind of companies?" Right?
Mm-hmm.
That's what they always say, and I always say, "Wait, let's step back. Let's figure out where you are, what's the right fit, and all that kind of stuff." And then it's the things that, in most cases, if you're not going to a VC route of that, you're too small for private equity funds. You could be going out to some form of a sophisticated investor, and the sophisticated investor is going to want to know that if their money's going to be, they're giving it to a trusted source because the
Sure.
money's going to be managed well and how it's spent and how it's
Mm-hmm.
used and have all this stuff. And part of that, if they're a business person themselves, successful business person themselves, is processes, right? So what would be one of the first things that this entrepreneur would want to sort of think? What would be the thought thing? They go, oh, I wonder if I do this right, or I wonder if there's a better way. Do they have their own sort of rose-colored glasses on, so they think they're just fine, and until it's broken, it's not broken, or what?
Yeah.
What
Well,
is it? What's a litmus or a trigger that would make them start to reflect that way?
yeah. So it depends on the CEO for sure. And I think the thing that's often the trigger is, oh my God, I can't keep working like I am. I don't have enough time in my day. I have to figure out what not to do, right? And so there's a trigger, and sometimes there's an event that is the trigger for that. Like I missed a vacation, or I went on a vacation, but I missed the vacation, or I tried to do something and it fell apart because I wasn't there. Right? There's often a trigger that really sort of brings home that, hey, you really do have to pay attention to this. And then once you pay attention to it, I think typically the first things that organizations tend to put processes in place for are those things that fall into F&A, right? You have to make payroll. God knows the number of startups we've seen who fail to make payroll from time to time. But you have to have a process in place for that. You have to have a process in place for all your accounting stuff. You have to have a process in place to pay your vendors, right? So sort of all the F&A stuff is an easy place, right, for process, and people typically hire that in. And HR, which I think typically people tend to outsource to someone who has the capabilities there that are needed. But I think sort of beyond those things, another area to think about process is not so much function, but how are you running your business? What's the process for running your business? So what are the things you're going to measure that are most important to your business? And by that, I don't just mean, right, your profitability, but those things that keep your customers happy and coming back in addition to those internal measurements. And then how are you going to hold yourself accountable to looking at the results of those measurements and doing something about them? And so that typically for the clients I work with, we set up a rhythmic meeting, which is maybe once a quarter, that we take the senior team and sort of lock them away for the day with laptop lids down and phones off. And we really do a deep dive into what's going on at the company, as well as some big strategic issue we need to look forward at. And so that's an example of a process that needs to happen. Because without that, you can have all the great goals in the world, but if you don't have a way to hold yourself accountable to them, it's not going to matter. You're not going to hit your goals.
So in that case, you're talking about really a better run ship that can be more profitable because it's or more efficient and generating more revenue easier because they've got these processes,
That's a really interesting metaphor because you, the captain, can't be at the wheel all the time, right? And even if you are at the wheel, there are too many forces coming at you. The ship, for the ship to continue along the course that it needs to go. You have to figure out, A, how to develop other people so they can help you run the ship, and then B, how do you get the information in, and how do you act on it in a way that has some rhythm to it.
Okay. So let's look at what happens when, is there anything different in that process when somebody is actually a company is queuing up to court acquirers?
Mm-hmm. Yeah.
Because let me set the stage in this regard too.
Okay.
Because, like my husband's an HR manager in a company or director, and his company acquires all the time. Mm-hmm. And so part of his challenge is merging those HR systems and things and compensation systems and all that stuff when they do this. And and early on when I was learning about acquisitions and stuff, and I would look at these things, a lot of times in the private equity funds, they'll go in and they acquire, and it seems like they care less about whether the companies have good processes or anything that's working. They are just looking at the top and bottom line of the financials when they're doing a financial assessment, or their the tangibles of how many customers they basically are acquiring with that. So with that, is there a time, or is it because then it gets you in a better position to maximize the purchase price, to go through these exercises of efficiency, process management, and system?
Yeah. So I think the first question for me, I always like to sort of back up to the biggest, highest level I can, is who is a likely acquirer for you and why, right? Because as you say, people get acquired for different reasons. Sometimes people just want your technology and they could care less about the processes you have to run your company, because they don't want your company, they just want your technology. And many times, at least in my experience, people are buying because they want your company. And I've seen so many VCs, for example, really look at, particularly if they're doing a lot of roll-ups, right? Who can be the base for the roll-up, right? Who can be the sort of the mothership for all these other companies we're going to roll up into? And that mothership is the company that makes more money and is worth more money because they have the team and the processes in place to run all the others. And then everything else gets acquired at a smaller multiple because they're only acquiring the technology or the space that they're in, or a client set or something like that. But my experience truly is that if you have processes, you have team, You have the ability to, you're actually a sort of a big company in the formative stages. If you left your own devices to keep growing, that is worth more than only having, sort of some amazing piece of technology.
So then when we look at process, and figuring that out, and how do you do that? So there might be a tops down view, and then, depending on how big the organization is, then it's the people that are actually doing stuff, and who may have just done it by trial and error, and they figured out this is the best way for them to do that particular job, and that's how they get it done based on whatever they're measured at. So sometimes a lot of those processes are dictated by how they're measuring, and incentive plans and things like that. So this disconnect of communication between the top and the bottom, and the things that they put in place, that they think they're driving certain measures at the top. And for anybody that's not watching my video, I've got my hands up above my head doing a top and a bottom here. But anything that they put in between there, and I can think of different examples where people have a ship has gone off rail because of an incentive that these people responded to, but they didn't really want them to do it that way.
Yeah.
Right? They were like, no. We really didn't want you to do it like that to meet that measurement. We didn't know that. So talk a little bit about, connecting those dots when you have certain goals for an overall organization, whether it's setting it up to be acquired, or whether you're setting it up to just be the best that it can be, Six Sigma and all that stuff.
Yeah. So I think what you're talking about in my language is that you can get unintended consequences when you set goals for people, right? In fact, we often get unintended consequences. Sometimes they're impactful and sometimes they're not. And that's why, just to go back, we were talking about earlier, it's so important not just to set goals, but to look at the measurements of how you're doing against those goals. Because if you're getting unintended consequences, you should be able to see that, right? But I think the way to sort of shorten this distance between the gap that you're drawing with your hands there is to get feedback from the people who are actually doing the stuff, right? To say, this is what we intend. We need behaviors that align with our intentions. So better not to tell people how to do something, but to tell them what you want that outcome to be and in what context. I get a really good example, I think, is an easy example, sort of sitting ducks, or salespeople and their comp, right? It is, if you ever want a plan to be dissected with all of its weaknesses and ways to leverage it exposed, just give it to a salesperson and let them look at it for 10 minutes. And they will be able to tell you, based on this is what's going to happen. Because we see it over and over again. We come out with sales comp plans, and the salespeople will go sell the thing that makes them the most money, regardless of whether or not that's what you really wanted them to sell or not, if you have not tweaked the sales plan in a way that allows them so that that's all really aligned. And so, right, paying attention to alignment of attention and behavior, I think, is a key and core competency for a good leadership team.
Yeah, when I was in sales over at IBM, and I was actually part of the sales team, the senior guys taught us young kids. Oh, okay. Here's the comp plan that just came out. It's January or whatever, and they're like, and they go like, so Karen, what are you going to focus on selling? And they, and I was like, I don't know. They go, well, look at this. If you look at this and you calculate this and this is stuff, and that's exactly what they did. They go, they figure out how do I work smarter, not harder. You know what I mean? And if there's a kick here, absolutely. So as you were talking a little bit about sort of like this process of figuring out how does the person do it at the base, it reminded me of a conversation I just recently had with my friend of mine, who is this engineer that was in a kind of fix-it engineer mode. He got promoted to sort of a management thing to anticipate how to anticipate the problem so they don't have to be in a fix-it mode. They could do this. Right. And so part of his comp plan for him to get his next bonus pay raise was he had to document 3 processes and look for process improvements in those things and submit that, like one a month or something like that, and he was doing that. And for him as an engineer, it was fascinating. He really enjoys that little element of his job. It's probably one of the things he likes better. And he was describing to me some of the things that he was sort of fixing and stuff like that. And he was contemplating taking this other job that was more fun. But then I said, no, once you get through that, one, you're going to be very valuable to the company because they know that you understand that basic process. And you'll also be at a point that the fact that you've gone through that, you're very valuable to somebody else. So it's really, that's a skill, like for people that are, like, let's just go with not the CEO of the company, but people that want to make their mark in a company and move up, understanding and be able to navigate that. And so we talked about sales, navigating, dissecting a comp plan. Do you think it's just an inherent thing that engineering oriented companies are more process driven than, say, sales and marketing oriented companies?
Yeah, I think we can make that as a general statement. Sure. I mean, I'm an industrial engineer. I live for making things efficient, right? That's my core being. And yes, I mean, as engineers, we are taught and we learn to think a certain way, and that is process. Now, having said that, I think that the newer marketers that I'm working with that are like really focused on demand gen, they are, they can almost run circles around me in terms of process. That is a science today. Instead of the old art of marketing. And I think they're also really good at it. I think what you were talking about earlier, I'm so conscious that people don't pay enough attention to rewarding the behaviors that they want, right? That we tend to reward firefighting. Somebody solves a problem in the last minute, or, hey, everybody managed to get things out the door at the end of the quarter, or to the client on the day it was due, or whatever it was. And that's all, that's good. Right? That's evident if it's truly heroic. But if you, I think it was Peter Senge that said, if you reward firefighting, you're going to get a lot of fires. So you need to also find ways to reward people who stop those fires from happening. And that's harder to do because if there's no fire, right, if there was not even much smoke, how do you know it would have turned into a fire? But you have to find ways in your organization to do that so that people get rewarded for paying it, not over processed, as we were saying earlier, but paying attention to process that will help prevent some of these last minute heroics from needing to occur.
So we didn't really get a chance to talk about your 5 things you cover in your book. You want to touch on those real quick so people know why they should go get No Dumbing Down from Amazon as this guide for CEOs on organizational growth?
Yep.
Let's take a few minutes just to touch on that before we wrap up.
Thank you. I mean, we've actually touched on several of them through the course of the conversation.
So that you can summarize.
I could hope, right? So, the whole idea of no dumbing down itself, which is one of the strategies in the book, is that we don't want, quote, teamwork as usual, because teamwork as usual doesn't work. A team can only perform at the level of its lowest performing member, and that will keep your A players from wanting to be on teams or really working to their potential on teams. And so that's like strategy 1. And then there's this whole idea of processes, tools, and behaviors that don't get stuck in the status quo, but are able to move along that continuum we were talking about earlier. Also that you can think about going from startup to grown up or back again, right? You don't want to it's not a one-way street. You may need some things that need to have more startup energy in them than grown up energy. We were talking about M&A earlier. My little brother had a great line. He called me one day, he's in tech, and he said, we don't really have an M&A department. We have an M&D department. I said, okay, tell me about M&D. And he said, it's merge and destroy. We go out and we buy these fabulous organizations, and then we set about systematically destroying all the value that we bought. Right? How many times have we seen that? So
IBM when they bought Lotus.
Right? Oh yeah, I love Lotus. Bob worked there, or not. He consulted there for a long time. Anyway, so how do you make sure that you're not over-applying process to these small companies that you're purchasing so that you don't destroy them? You can get the value that you purchase, because a lot of people tend to get rewarded for making the deal, but not so many for making the deal work. And so paying attention to making the deal work and integration is really big. I think this idea of being able to deal with ambiguity, I think about it like playing bumper cars, right? You get into the bumper car and then this, stuff hits you from different sides and you go careening off, but making sure that you've got some guardrails in place so you can stay on the playing stage. So there's some strategies for accomplishing that. And then lastly, before we get to accountability, is this idea of making sure that as a senior leader in an organization, you create time to think. We spend way too much time on the short-term and the urgent at the expense of the long-term and the important. And it's super easy to do, right? There are lots of shiny objects coming at us all the time. There are lots of problems to solve. We often run through the organization, sort of day by day, hour by hour, playing whack-a-mole, just solving problems by knocking the holes, getting the moles back in. But those moles are going to keep popping up. And if you don't make time to pay attention to the long-term and the important, then you're never going to be able to get ahead of the race. And I think it's one of the most important things for a senior leader to do, and one of the things we pay the least amount of attention to. And then lastly, it's just this idea of having some accountability structure. And that accountability structure needs to be both personal accountability, which both you and your audience here must be good at, or they wouldn't be the successful people they are today. But if you can reinforce that with some team accountability and some organization accountability, you have a much better chance of really achieving your objectives.
Excellent. Thank you very much. Wow, that is just a general, it's just a general, how do you be a better business?
Yeah, it's like a primer to be a better CEO or a better senior leader, or even for somebody who wants to be, aspires to that in their career, to really think about, oh, these are the things I have to pay attention to. Yeah.
Yeah. Maybe I'll buy from my husband. That'd be
Perfect.
good. I'm not that big, but he could use, they do all that kind of acquisition and that kind of stuff. And they're always trying to figure out, well, most of the time they're trying to figure out better processes, but
exactly.
Anyway, so, all right. So everybody, please, as you're listening to this, to get more information from Karen, to look at what she might be able to do for your company. I guess your main website is KarenWalker.us, or do you have another website that you said?
No, KarenWalker.us is the easiest place to find me. NoDumbingDown.com, which is the book. We'll lead you to information about the book. And then on all the social sites, I'm just Karen Walker US.
Okay, very good. And again, for me, in keeping in that tradition of Karen's with last names as websites, KarenRands.co, and all of my content forms to fill out, to engage for a consultation for what we do. Everything is there. All my social media is there. So, Karen, thank you so very much for taking your time out of your schedule to be a part of our this conversation today. It was very useful to me. I got a lot of aha moments. I shared a few memories I hadn't in a while, so that's always a lot of fun. And look forward to our paths crossing again in the future and seeing how we might be able to help each other.
Terrific. I enjoyed our conversation, Karen. Thanks.
Thank you. Everybody have a great day. Onwards and upwards.